What's up, everybody? We're going to be starting in about 25 minutes here with Nic Chahine, Chief Options Leader at the Options Inner Circle chat room. He's going to be with us talking about the market, following up on a couple of setups and trades as well. So stick around, guys. We'll be here in about 24 minutes or so, starting officially. And go ahead and let us know in the chat what you are trading, what you're looking at. Good afternoon, ladies and gentlemen. Welcome today here to the session with Nic Chahine. I see you guys are pumped in the chat. Okay, very nice, very nice. Hey, Fred, what's up? What's up, Eugenia? Guy, what's up? Clinton, Ginger, Meta. Yeah, that's a good ETF. I like that one. Tesla, Guy, absolutely. Santos, how are you doing, guys? Great to see you here live on a Thursday. Today's a very special day here. We have a very special session here for you guys. So let us know where you guys are tuning in from today. Let us know what part of the world you guys are checking us out. All right, Massachusetts, Boston, Missouri, Stockton, Florida, Illinois, Trinidad. Okay,
I saw New Zealand too.
New Zealand, yeah.
I did.
From there.
That's pretty cool. Somebody's from LA. It's raining in LA, right? It's raining in Southern California.
Poland.
Like real Southern California.
Okay. All right. Yeah, that sounds about right. People from all over the world. Interesting, guys. So today we have a very special thing going on with Nic, and we're looking at the markets. Nic has a special session here for us today. So Nic, go ahead. Before anything, a brief introduction for those that are not familiar with you and your inner circle and all that stuff.
Sure. I'm going to steal your screen if you don't mind.
Go ahead, man.
What is AVCT?
It's a stock that went up quite a lot today.
Oh, okay. I saw a couple of crazy ones today. I forget which one, HCP or something like that.
Yeah, it dropped with some of these other cloud companies, and then it reported some deal today. I picked it up on a scanner here, and some people in the chat room were trading it.
Oh yeah, somebody's from Sunset Beach. That sounds like a pretty place. Sunset Beach. Okay, so all right. So what we do, I've been working with, my name is Nic Chahine. I'm not from Wall Street. I'm an ex-engineer, electrical engineering, who went into business and been trading my entire life, stocks in the beginning. And then I discovered options, and then I discovered charts, and then I developed the passions for both. And now my mission in life is to help people like me. Like if I could go back in time and help me years ago, oh man, that would have been so good. Instead, I had to, take my lumps, make mistakes, learn from them, and move on. So right now I have a good handle on the macroeconomic conditions, like what does the world look like, because that's really important, because regardless of how good the one position is in that one AVCT, you need to know what the world looks like to see if everything is going to rally or not. And then I've developed pretty good skills in reading charts and discerning fundamentals. Being technical, the world is technical now, that gives us an advantage. So the idea is to simplify it down to very few things that I manage in order to be successful and make the right moves. And most importantly, avoid the wrong ones. And believe it or not, I'm willing to bet none of you here, I don't know how many people we have, none of you here have picked the wrong stock before, but you pick the stock and you have bad luck in timing, right? So if we can fix that, then you'd have so many more wins. Avoiding the mistakes brings many, the win column will be so much bigger. And avoiding the obvious mistakes, like I'm looking at Intel. I didn't mean it. This is just on my screen right now. If you bought Intel on that spike, you made an obvious mistake. In fact, we were long Intel before that. I had a discussion. I said that would be one I would own for a long time for various reasons. But not buying it on the 10% pop was an easy mistake to avoid. Now, if you bought it on the pop and you got stopped out, you doubled your mistake today. So today I would have bought Intel if I had missed the pop. Okay, so that's the kind of easy mistakes to avoid. You picked the right stock. Intel is a fantastic company, underappreciated. Did you know it's bigger than NVIDIA and AMD twice combined. So combine them both, double them, and they'll be almost as big as Intel. Nobody knows that. Nobody thinks about that. It's the monster in the field, but it doesn't hog the headlines because of management is blah, 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 blah. Anyway, so that's me. That's what we're going to talk about. Things we can avoid. We're going to define risk because that's super important. Believe it or not, just the definition of risk is going to change your trading habits. We're going to put a few rules, what not to do to make fewer mistakes, and we're going to define options. So give me in the chat room a 1 if you've never done options, so I can kind of have a gauge as to what are we talking about. So I'm going to start counting here. So that's 10. Never, okay. 4, we have a pretty strong one. Luther, I expect good answers from you later. Basic puts, okay, Rizwan. All right, so I'm up to about 20%. I only lose. so it's a 1 for you, Taran. 3, all right, Mike. Okay, so we have a lot of 1s, we have a lot of nevers. So all of you 2s to 4, you're gonna have to listen back to a few basic things about options. Forgive me about that, but I bet you also will have a like, hey, you know, that's cool. Okay, that's a different way of looking. I promise you, I don't look at options like everybody does. I shorted Apple yesterday because of something in the options world, okay? And it's not like I hate the company or anything. It was just a straight up short, with very finite amount of money. And I shared it in the chat room. And so far, so good, you know. Anyway, very basic. So what we're going to do, everything I said, we're going to jump into options, define the basics, and give you an idea of what I do with options that makes it almost headache free. So if you think about investing as a competition, then you have a leg up on your competition because whatever you do is a competition. If you bought a stock today, you bought it from somebody. You didn't take it off the shelf. That somebody thinks you're doing something wrong because they're doing the exact opposite. So who's right, you or them? If you bought an option, you bought it from somebody. Who sold it to you? They think the exact opposite is you. So whatever you do, assign yourself and do I have an edge? Why do I think I'm better than the other person on the other end of my trade? They don't come off the shelf and they don't go back onto the shelf. Whatever you do, you buy something, you sell something, there's another person on the other end or a machine. So there's a code that somebody wrote. So somebody is doing the exact opposite. So you need to make sure that you have your edge. If you don't have a system, you're winging it. And if you're winging it, if you're not super freaking lucky, and I don't think anybody is that lucky. So you bought some NU today. Hey, that sounds familiar. Somebody in my chat room said that. Christopher, are you part of my chat room? Somebody said exactly those words, like late in the day. I bought NU today. Okay. So we will visit NU. Oh, you're in the room. Oh, okay. What is NU? Is this like something that just came up today? That's weird. Okay, never mind. We'll go somewhere else. All right, so let's jump into it. And I promised you I'm a macro guy first. If I can get my charts to cooperate. So we're looking at the S&P. This trading platform is called Trading View. It's not a trading, I think they have trading in it. I use it to do homework. Okay, and so this is a daily chart, which is what most everybody looks at. I usually, if I'm taking a trade, if it's NU, if it's whatever, I jump in. So I jump in. The first thing I do is I have to evaluate the big picture. So what are the odds that we're going to have the correction? What are the odds we're going to be rallying? So within that, because no stock is going to trade in a vacuum, right? So then then if I'm okay with the situations, okay, we're going to have CPI tomorrow, that might cause a little blip, but all the bad news is already written. We already know we have inflation, etc. So I have a good handle on the overall. Then, okay, now I can look at Intel. So now I look at Intel, I delve into Intel, and I look at their financials, and then I say, okay, growing revenues, that's pretty good. It's not superstar, they're not like extremely fast. However, if I look at the bottom line, they're double than 4 years ago. That's pretty good. So management is making the most of its tepid growth. There's nothing bad about that. So I go to statistics, 10 PE. They just got into the double-digit PE. That's cheap. Under 3 price to sales. That's pretty good. So it's a monster. It creates $40 billion almost in cash flow from its own operations. There are no reasons to sell it, right? So it's a bargain. Let's go to a weekly chart, reset. So it's been stuck for 5 years. This is almost 5 years. Okay, so it's been stuck for 5 years. Weird you should say that about SoFi. I'm looking into both of them as I hung up my phone. I talked to my phone to dictate stuff. SoFi was the other one. I was looking at this one. I was looking at SoFi, Christopher. Anyway, so this is 5 years worth of data. So every time it comes to this place, it bounces. This place, it bounces. So this is a base. It's just above a base. If you know anything about volume profile, that orange line, I didn't draw it. This is the highest point of volume in 5 years, that peak right there. So what are these? We're getting ahead of ourselves. That's another layer of comfort. Okay, so the process, macro, we looked at it. The micro, what does Intel look like? We looked at it. Okay, technicals, there's nothing flagrant. It tells me I have support. Now I go trade. Okay, so now I go trade. How do I do it? First things first, I have to define my risk. Now, let's debate. Not debate. I'm going to throw a quiz at you. I think we have time this time. If you were throwing a class, hey, there's cool. So if you were throwing a class, how would you define risk? And if you've been in one of my classes before, don't spoil it. Be honest. If you've never failure, okay, that's the outcome. But how would you define risk to me? You're teaching me a class. And I can guarantee you're all going to get it right, but half right. Max loss, okay, that's one. Downside, max loss, okay, losing more than you can afford. Not doing any due diligence, okay, willing to lose, okay, but how much, yeah. Acceptable loss, okay, so everybody's on the same page. Opportunity cost, am I willing to lose? Max can afford to lose. So everybody's getting it right, but not fully right. I know you know it. Gene, you're on the right track. I don't think you said it right, but I know you know it. Okay, so I'm gonna tell you how I would define it. First, I think I have a joke here because I'm gonna pull a scratch bet. There you go. Ding, 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 Jason. Okay, so it's two pieces. So let me see here. Is this? So first things first. First tip: turn off the news. Turn off the news. You do not need the news to trade. In fact, you will make mistakes. These are two headlines a day apart, basically. Read them. It's a comedy. I mean, what? So first, the Dow jumps nearly 650 points, erasing last week's losses as investors shake off Omicron worries. The investors shook off Omicron worries. First of all, Omicrons were not a worry in the stock market. Then today, stocks mix as investor assess Omicron variant risk. Are you kidding me? Who writes this stuff? I mean, what? No, this is not value added. Okay, this is not value added. All right, so garbage. So you know that Omicron was not the worry, because if it was, Zoom would be spiking because it benefits from virus fears. It didn't. Everything that benefits from virus fears fell. Netflix fell on the crash last week. Those would have benefited from virus. So it wasn't that. And it wasn't rate hike fears because the TLT broke out. And I said, we were long the TLT. And I said, short the TLT, on Friday or go long markets on Friday. You don't do both. And then I chose to go long the SPY, and we closed it on Wednesday at the peak. So it was a massive win just because we used our brains and we didn't listen to the news that said virus fears or rate hike fears. It was neither. It was December 3rd deadline on taxes. That's my guess for big companies, like big money managers like Vanguard and such. I'm not Wall Street guy, but I can guarantee you it was a Wall Street thing. Okay. All right, so definition. I pulled up the Scratchpad for a reason. I'm going to use it just as a piece of paper. All right, so the definition of risk, one. Sorry if I'm animated. You should see me. I'm talking with my hands too. Anyway, the first part is dollars. How much can I lose? Everybody here got it. I didn't see anybody that got this one wrong. And I know the ones that didn't say anything, they got it right. So that's how much I can lose. You sit down, you debate it with your significant other or your family, or think about it yourself, and you say, you know what, I'm only willing to lose $1,000 on this trade, or 5,000 or 500. And then I set that amount and I move past it. When you say I'm managing my risk, this is not the part you manage. This is the part where you decide on and you move off of it. You accept the level of risk. Okay, should the you know what hit the fan, I'm okay, it gone. Okay, I'm okay, it goes away. Otherwise, I shouldn't take the risk. So if somebody told you to jump between this ledge to that ledge, what do you do first? You look in between. How big is it dip? Is it like 3 feet? Okay, I'll try it. If it's 20 feet, regardless of how sure I am I can make it, I'm not going to try it. So if there's unacceptable risk, you shouldn't take the trade. You don't say, I'll take it a little bit and then bail out. No. Like, for example, shorting stocks is illegal in my book. You shouldn't do it unless you have 9-digit account. You shouldn't do it because nobody is that liquid. Nobody survived the spike in GME the first time, guaranteed, if somebody was short. So there are ways to use options to short without unlimited risk. So the rule of the taking risk, what is the first rule? Know how much you lose. When you short a stock, you don't know how much you lose. You say, I'll stop out. Maybe you can, maybe you can't. What if you can't borrow the stock? What if you can't find stock to buy to cover your short? What do? Yes, Donald is saying that you could use the options to spend a little money to short a stock, and that's the maximum you can lose. It's called buying a put or buying a put spread or selling a call spread, which is what I did with Apple. You can take my situation and check it tomorrow and see what I did, if I won or lost. And if I lost, how much I lost. And if I won, how much I won. I'll explain it in a little bit. I'll use it as an example. I did in the chat room live. I said, here's my trade. And I explained it. I'll explain it. It's shorting, but with a finite amount of money. Okay. So you determine how much you want to lose and you move off of it. You don't manage that. What part do you manage? There are two people that mentioned it in there. I think I forgot the names, Gene and somebody else. The percentage. So when you do homework and you decide to take a trade, not emotions, it's your odds. When you take a trade, what are my odds? What are my odds I'm going to win? What are my odds I'm going to lose? The percentage. D, that's it. So that's the part you manage. Because when you first take a trade, you do your homework, you think you have a leg up, like whatever company you're trying to go, like NU, whatever that is. They did homework and they found out, hey, NU, I know this about it. Most people don't. And it's possible. And then you say, therefore, I think I have an advantage. By the time everybody figures it out, I'm going to be in on the ground floor. You jump in, you assign yourself an advantage. Let's say that advantage was an event or something that was going to be announced. And then 10 days later, where you thought it would be already out and it's not out, suddenly that percentage drops in your head. It's like, maybe I was wrong about that. Or if you took the position for the earnings update on some production for some EV car, and they delayed it, or Novavax, they said, oh, we're going to need another 3 months. Suddenly that advantage is gone. Therefore, your percentage should change. And that's the part you manage. Okay, Christopher. So that's the part you manage. What are my odds now versus when I took the trade? And you should be honest with yourself. So luckily, and thank goodness for this, with options, there's a number you can read. It's like, what? Somebody gives me a number of what are my odds, and it updates every second. Yes, it's updating continually during the day. And if you develop a system that works for you, and it may take a couple of whiffs before you come to terms with, okay, that worked last time, let me repeat it. Then you all you have to do is just wait for the number to come up, take the trade, and wait for the number to change against you to close out of the trade. It becomes mechanical. Then I don't want everybody to become pro traders. It's impossible. But everybody should have pro trader habits. I promise you, I don't know a lot of successful professional 100% fully funded traders, but all of them have a system, and they don't break their rules, very rarely. And when they do, most often they say, shoot, I should have listened to my own self. Okay, so develop pro habits. And most pros don't even break it down like this. But if you break down your risk to A, first I decide how much I want to lose, and B, I assign myself an odds of winning or losing, and I track it. Now you're heads and shoulders above most everybody else. And I'm going to give you the ticket right there. The next one, get a piece of paper. I'll wait. I'll take a swig. Hold on. Let me mute it so it doesn't sound gross. Meanwhile, go get a piece of paper. I'm not joking. Okay. The letters NT, NT, Nancy Tom, Nancy Tom. It's no trigger, no trade. If you don't have something that happened, a reason to take a trade, you shouldn't take it. So, and if somebody says, but I'm not a chart person, first of all, get a chart person, because you're going to need them regardless whether you use it as a trigger or not. And that T can be no thesis, no trade. So if you're not a chart person, then you must do homework and have a reason to buy stock. Like, I have a cousin who trades really well and doesn't use charts, but he's super smart, and he jumps in on big, he's what do you call that? Passive investors. So that's big money that usually does a lot of homework, nitpicks the company's prospects inside and out, evaluates the addressable market, time, blah, 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 the old school. And then they take a position, totally valid, but they have a thesis. So then they know when to get out. When they're proven that their thesis is wrong, or when it plays out, then it's time to book profits or cut loss. So no trigger, no trade, no thesis, no trade. Believe it or not, you can have both. What? Okay, so I did that today. Merck. I had a thesis and I had a trigger almost. So anyway, you could find like SoFi, I bet you I can come up with both right now. So no thesis, no trade. NT, just put it big bold letters right next to your computer, wherever you trade from. This way it reminds you the last minute before you click send that order, wait, do I have a reason, or if I'm going on gut? If I'm going on gut, maybe it works out, maybe it doesn't. If you're going with a reason and you think about it, and then you're less likely to commit egregious mistakes. And even if you are not a chart guy person, this is what are we looking at? Is this Intel? Okay, so if you go to take a trade on that day right there, all you have to do, you don't need to be a chartist. Look left. Just look left and see what happened the last time the chart was there. Boop. So whether you want to or not, machines do that. And they will act based on the past history at least once, most often. Sometimes they bust through, rare. So be it. If you miss it, you already missed 10%. What are you going to miss? Another 3%? Big deal. This Intel, for crying out loud. You should stop yourself. You say, I'll buy the dip. Or buy the breakout from this next level, which was nowhere near there, I don't think. Let's go back. This is a weekly chart. It hides a lot of mistakes. So here it becomes clear, like, holy crap, that was a big ledge. And look left further. That was a big ledge here. And that gap closed and they failed miserably. And if I look left even more, look at this. I mean, it has history. It has history. So I should have just looked left and stopped myself from buying a call right there. So if you bought shares, not as big a problem because you can sit on them for whatever, however long you want. If you bought calls, poof, gone. Guess why? The VIX was high too, right? And then the VIX got shellacked in the last couple of days and now it's recovered a little bit. So that really killed your calls. Okay, so again, let's recap. We looked at defining risk, 2 pieces. How much I'm going to lose, assign myself a percentage, have a reason to take a trade. This will let me know when to get out, when to book profits, have an exit strategy. So if I lose X percent, I should get out. If I lose X dollars, I should get out. Different people do it differently. Or sometimes, hey, if the stock falls below here, I should get out. Let me see. I'm trying to think, what stock was it? Was it Merck? Okay, yes. So Merck, I said, okay, I think I'm going to try a long. I will stop myself out if I lose X dollars, or if it loses this line. That would be my trade because I'm not married to it. It looks like a good bounce area. It looks like it has good fundamentals. It looks like there's a harmonic trigger there if you marry it with the RSI. So that looks like a decent place to get long for a trade, but I am not married to it. I will get out if this happens. Somebody else might say, no, I'll get out if this happens. If they lose this one, also valid, pretty close. But I do have an exit plan, okay? So I don't want to sit in a place where it's like, oh, maybe one more tick, maybe it reverses tomorrow. No. And guess what? If I get stopped out, and the minute I get stopped out, it reverses and goes up without me, I'm okay. I mean, it sucks, but I'm okay because I did the right thing. Hindsight, it wasn't the right thing, but I did the right thing. And I will do it again. If you're in it for the long term, trust me, this works out in your favor more often than not. Okay. So no, these are not Bollinger Bands. I'll speak to them in a little bit. I usually don't have anything on here. In fact, I'll show you my usual. I'm testing a new tool and I forgot to turn it off. Okay, so this is the only study I use. This red blue here is a visual representation of a reversion to the mean. So it's a regression line. That's it. I don't use it to trade. It's just a visual representation to tell me, okay, you know, we have a trend of sorts. That doesn't mean when it hits blue, I short. When it hits blue, I go long. No, it's just a visual representation. So this all says they reverted to the mean. They traded around the mean. They went overboard. They reverted to the mean. They went overboard. They reverted to the mean. They went overboard. They reverted to the mean. So just visual sanity check. That's it. It's not a trading tool. The trading tool, this is a trading information for me. You've heard price is truth. This is where price is. Okay, that's literally where price is. Okay, back to the recap. We recapped everything. So I set the scene, right? So of the process, do homework. All these orange dotted lines, these are alerts that I put manually. So I do a ton of homework and then I put alerts. And then all I have to do is wait for the alerts to fire and then I go see if I want to trade. So if it comes into here, I have an alert that probably says catch the falling knife and stop out if it doesn't work because it's a pivotal zone. Same deal, same deal, same deal. So it may take a long time to trigger all of these, but they're there. You do homework, you set your alerts, you go about your business. My watch list is hundreds of tickers just because of the people I deal with. I have hundreds of people every day in the chat room. So what I did is I adopted their watch list. Every Sunday, we review tickers they want to see. I have a live webinar free at my own expense time. It takes usually an hour. I said an hour, and now it's 2 hours every Sunday. And the end result is a list like this. This was last Sunday, 129 tickers with comments and clickable thingies, charts, so they can review them at any point in time. Today, 2 people asked me for that list. I was like, that's like 5 days old. Yep, they still wanted it.
Hey, Nick, really quick. So those are hundreds of tickers that you go and do technical analysis, leave notes, and you do it in a video as well. And you
Yes,
post the
video,
recording.
and the yellow ones have videos instead of charts. Like this is a YouTube connection. So on Friday we had a terrible drop, right? So I did a specific video just for the large cap companies because they are about 60% of the market. So we owed it to ourselves to look at them big time. So I did a video for the Fang Gang, included Microsoft and Apple and Tesla. And then I did a video for the semis, which included NVIDIA and AMD and Intel and Micron, I believe, and a couple other ones. And then I did one for oddball companies like Roku, Disney, Zoom, and something else. I can't remember. So yes, all this every week. And somebody said in there, I'm busy. Yeah, today I pretty much hit my limit with the energy drinks, but it works. It yields results. Today was very fruitful in the chat room. And by the way, yesterday you found that out. 2 days ago, you found that out, Rodrigo. I'll show you this 6 square window live every day. So today I saved a ton of people from getting stuck on upticks. So once the day went trending down, I said, don't trust upticks. This is the NASDAQ today. If you try, oh, this is it, we're going to reverse, boom, you got locked into another drop. So that's called upticks mode. I made up that word, but it totally works. So we watched the action today. We traded almost perfectly. In fact, that last bounce in the S&P, I said, it is a catchable bounce. This is how I would do it. And then I said, all right, if you took it, this is where you book it, and boom, it reverted lower immediately. And it was this bounce. It was a violent bounce. And then this is how it closed, terrible close. But we had said it's going to revert. Don't trust the upticks. Boom, sure enough. So,
hey, Nick, really quick here before we get into this, there's a lot of questions here about your trading room. So guys, I'm just going to post this link really quick because I want us to focus on the session today. Nick has a trading room. It's a chat room. It's open 24/7. There is a 78% discount. You get a laptop if you do join. And this is Nick's trading room. It includes the weekly session on Sundays, the daily trades, the 100, 200 tickers that he's giving you every week. So, and everything that we're going over, this is a sneak peek pretty much of that. Right?
So along those lines, we have an open line of communication. Let me see, is the chat room still hopping? So this is the chat room, and these people, they're here after hours. But today I couldn't keep up with this, with the demand here, with the questions. So people were helping. Like if somebody was asking for a link, somebody would come in and dump the link in there. People were sharing their credit put spread, credit call spread. We'll talk about those in a little bit, and how they were trading. Some people had good luck and some people were a little frustrated. But the point is, we collaborate all day, every day. So if you wanted to learn something and you ask me, even in a direct message, then we'll have a debate about it. And yesterday somebody did that, and the end result was a video teaching okay, perfect example today. The idea was, okay, how do I trade Chewy? Remind me to show you the trade setup for Chewy. And I did a whole spiel about it. So I can do a video tomorrow about it and wrap it up for them. So if they were in the room, the concept came up, not to trade Chewy, but to learn from it. There were incredible nuances in there that had tremendous opportunities for people who see this event come up again. There was an extremely violent setup for Chewy, and I'll share it with you. And it was a big advantage for somebody that just caught the difference. If you were watching Chewy in here, I would love it if you caught up on what you saw in the options setups for Chewy for today, some unusual situation. My first question before I join the group is NTNT. What is your question? Oh, it's Omar is asking for a trial. So
yes, Omar, we have a 7-day money back guarantee on Nick's trading room.
Right. And I'll tell you why, Omar. If you don't commit, you don't put in the effort. So I learned from myself, like I'll give you an example. There was another tool that somebody gave me for free to try. I didn't pay it attention, and then it expired. Had I paid for it, I would have used the hell out of it. But it was free, and it was one of the big chart guys. I can't remember his name now. Shoot, symbolic. Anyway, the one that does the counts. No, it'll come to me. I'm having a brain fart here. So anyway, back to here. The group works because we're all pointed in the same direction. So I shared a video on Merck. It was about 12 minutes long. I shared a table setup and the reason. In my video, I described the macroeconomic conditions. I described Merck's conditions. I looked into other tools, like I have access to the market structure edge tool, which costs about $100 a month. And I share the findings of it almost daily. Today I shared it, and I looked at Merck, and it was at a 1, which is good, underloved. At least I'm not making a mistake there. So I wrapped it up on Merck from all angles. For me to lose money on Merck, something has to really go wrong. So I lined up the fundamentals, I lined up the macro, I lined up the technicals, and then I went above and beyond with the market structure edge tool. So it's like from all angles. This is the definition of not the obvious mistakes, right? So I said, stop out, either here or either here. You have to pick your stop out level. And this is what I'm trying to capture. I don't want the moon. There's going to be a lot of sellers. Yeah. Okay, back to what we were doing, which is this is a new edition. This I've done it, 2 days, 3 days? I can't remember. This may have been the third day. This is on, you can sit and watch it. Today we had 107 people. Yesterday we had 108 people that are just interested in intraday. So there's no discussions in here. They can ask me in direct messages, but I don't want open discussion because the focus is on finding intraday scalps. And there were a ton today. They were really too many to count, but they were cool. And Tesla was one of them as well, but I did it sidebar because I ran out of windows, and they didn't want to give up one of the windows, so I stuck with just updating static Tesla. Okay, the opportunity is there. The macroeconomic conditions are easy to read. Somebody was asking because they don't change. There are 3 things that drive stock prices. 3, that's it. One is having a system that's not broken, and there's nothing is broken, and then having money flowing. And we've never had this much money ever in the history of mankind, ever. Okay. And 3, sentiment. And that's the only variable. And the media is whipsawing left and right, flip flop. That's why this choppy action, because sentiment is the only variable. We know where the Fed stands. We know where the money is. We know where the government stands. And yet the only thing that we cannot believe that it's going on. Let me give you a sobering stat. Anybody keep track of how many trillions we dumped into the economy last year? Is it 5? 5 trillion? $11? Whoa, that sounds pretty high. Let's say 5. Let's say 5. Now, okay, let's say 5. Let's go low. 5. Okay, so first of all, trillion is so high that most people don't know what comes after a trillion. Right. So if you spend $1 million a day, it takes you 2,740 years to run out of 1 trillion. 2,740 years. Can I cuss? That's a shit ton of money. Okay, that's a lot of money. So how long does that take to burn? Yeah, so it's a lot of money. Therefore, the macroeconomic conditions, unless we have a black swan event, world war, some terrorist event somewhere, God forbid, something that is not on the docket right now. Taper is less QE. It's not even QT. So the taper is baked in. The QT is almost baked in. 1 rate hike next year, maybe 2. We know about it. It's not a surprise. A surprise if he says we're going to have 1 a month. That would be a surprise. And that's not baked in. Let's see here. Quantitative tightening involves also selling off assets off their balance sheets. So tapering means Fed buys fewer assets. I don't know if you knew, they bought $120 billion a month of treasuries. And some junk bonds, I think maybe they stopped the junk bonds anyway. So they tapered last month, first time, November. They taper in December. They taper January, meaning they buy fewer. I think 10 or 15 billion fewer a month. So they're going to close out at that rate by the middle of next year. So the QE continues until the middle of next year. So he said last week, that's why he crashed the market. Part of the things, we may speed it up a little bit. So let's say they end the QE in the first quarter of next year. So then we have no QE, and then they start talking about raising rates, and then they start talking about selling assets. The stuff that they're buying, 120 billion, they start selling it. So if they're selling, they're taking money out of people's pockets, out of banks who lend to people. That's how they crimp the economy. Okay. All right, so back to reality here. So we covered all the things that we do. We covered what happens in the chat room. As far as services, what I provide is a group setting where we can trade for people who can be in the chat room. Do you have to be in the chat room all day? No. You can pop in and say, hey, what's up? First thing in the morning, I provide a plan for the day. So hopefully I can scroll up fast enough to get to that plan to show you how simple it is. But I use it for myself, whether I share it with you or not. What is this? Somebody sharing their own trades. Okay, so this was a setup. Look, this was Apple, 1 minute chart. That was a fast trade setup. I say, you fall below here, you can short Apple. You go above here, you can have a little bounce. That was an iron condor that I shared earlier today. Somebody was asking, how can I get long the iron condor for 1 day? So this would yield 25% in 1 day if it hits. Okay. Let me see here. I'm trying to get to the morning note. It's very simple. So if you can't be in the chat room all day, you pop in, you get the morning note before the market opens, you read it and say, okay, now I have the lines. You can mark the lines. The plan. There we go. First thing, what time was that? 5:44 my time in California. So the plan today, small dip overnight, the S&P NASDAQ tight ranges, and then I give the charts for the ETFs, for the futures, and whoever is reporting earnings. I trade using E-Trade and Thinkorswim. You can do options in Robinhood. I don't use them, but you can. So every day you get a message like this. And then in the middle of the day, you get a recap and most likely a video with the trade setup. Today was Merck. Go back to the bottom. Okay, so. Okay, somebody's asking a question. Spend 1.5. Okay, and in a demo, we'll answer later. All right. So they're not waiting there. They get frustrated and leave. So what next? How can options help us out? So the setting is we trade together, we update each other, we got each other's back. I'm watching my own watch list. My watch list would be probably 20 tickers, but everybody has their own 20 tickers. And in reality, my watch list has become like 300 tickers because everybody's got all kinds of tickers and we track all of them. Having said that, what's the best method for me? Owning shares with conviction works. It requires a lot of capital. So the conception is that options are dangerous. No way I'm going to mess with them. I'm going to convince you otherwise today. I'm going to convince you otherwise. So the options provide you like a faster way to profit and lose. So if you use them, if you misuse them, you suffer big time. So if you're one of those people that takes the trade without the NT&T rule and without the proper technical setups and without looking left on the chart, then you're likely not an insult, winging it more than actually you're not picking the wrong stock. You're just not giving yourself the best starting setup. Okay. And if you do that in options, you get hurt pretty quickly. That's why they say options are dangerous. If you buy, I'll take a $50 bet here, I'll take a $100 bet here, I'll take $300 bet here, and then you look at your account, it's like, whoa, what happened? Well, you took a whole bunch of bets that were, but then you need you need to be a little more disciplined with your entry. It's not as forgiving. Scalping is easier with options if you have good timing, because you can get in and out. Like today, at the last bounce in the S&P, I said I can scalp it. I can get in and get out like a futures traders would. This is like somebody came back and asked me which spread is like, whoa, if you're already too late. This was a fast trade for fast hands. So it's not for everybody, and it's okay to miss it. I missed it because by the time I typed it and hit enter, I missed my opportunity. So that's not my goal. I don't like to trade like that. I'd like to trade more like Palantir. Okay, it fell under 20. I like it long term. Okay, how can I trade Palantir, which I traded today? I said, I'm going to take a flyer on Palantir here based on fundamentals, mixed with some technicals. I like it long term. I'm not going all in. Here's a way to mildly run into Palantir. My baby. All right, Khalid. So let's get into options. All right, so I'm going to pull up an options table. So I'll take it off. So we are looking at Chewy. Let's use that for now. Yes, I'm going to get to that. So check this out. This is I picked Chewy just randomly because I was just talking about Chewy. And I'm going to pick January. So options are contracts. Okay, now we come into the lesson, contracts. So like all contracts, they have terms and they have Greeks. And I promise you, I'm going to try not to use any Greek words. If you tell somebody that you just took an options class without any Greek words and go, what kind of a snake oil salesperson is that? Yeah, I think it's the other way around. They want to complicate things and tell you, are you long gamma, delta? Blah, blah. Hey, I'm going to put plain, simple English with something that just makes total sense. You can go delve into study the Greeks. They have information out there for that. I don't think they're necessary to do things right simply. Have you heard of the KISS method? Keep it simple, stupid. Yeah. KISS works totally well with options. So let's get there. So they have terms. The first term, time. So take your pick. How long do you want your contract to be? Time. I'm going to choose January because it's a nice round number. 43 days on the clock for January contracts. They expire on the 21st. I don't set this. That's how it is. Okay. So that's one term, time. They call this theta. They call it theta. It's time. Okay. And then you have a level. At what price do I want my contract to be? All these levels are there. They add levels as time goes by. I bet you if I go to the weekly, you'll see smaller increments, like this 50 cents level. So let's go back to the monthly. They have levels, they publish them, they update them daily. Okay. So now we have time and we have levels. Okay, now comes the odds. At what odds? This is the secret sauce. I have columns up here. I'll walk you through all the columns. The most important one here is the odds maker. This one. Delta. So the delta is, I think about it, like this is my odds maker. If I were a casino, this is where the casino makes their money. They take a high odds bet, right? So think about it. So this side here, they're called puts. Puts. Everything here is a put contract. Everything here is a call contract. Okay. So what is a put? What is a call? We'll get to it in a second. Is one bullish and one bearish? No. They're both bullish. They're both bearish. What you do with the put or the call determines whether you're being bullish or being bearish. It's the same thing. Okay. So if you look at on the put side and the delta at current price, currently it was $56 when it closed. It's now 8% lower, but it was here when it closed. So this one had a 50% chance of winning or losing because it's right there. The lower you go, the lower the odds. So those people that bought that put had only a 6% chance of winning tomorrow. Okay, so let me rephrase. There's a 6% chance based on today's close that Chewy would be $30 tomorrow. Okay, 6%. Right now, it fell 8%. It's $52 now. So it's right here. So these were correct. They're low odds. I'm sorry, this is the bet goes on for 43 days here. So there's a very low chance that Chewy will be at $30. Let's go look at it on the chart to put a visual to it. So Chewy, it helps to put a visual to it. So this is Chewy weekly chart. So it's inside, and it closed right here. Right now, it's that blue line after hours right there. So it's right here. Interesting level. So I'm saying there's a very small chance that Chewy will be here. Does that not ring logical to everybody? Down here, okay? There's a 50-50 chance Chewy would be higher or lower up here. That's what's today's close. There's 6% chance that Chewy would be at 6% at $30. It's not nil. It could go there, given a set of circumstances, whatever they are. It could go there. It's not impossible, but it's pretty low. Okay, so the price of that contract is low. It's 50 cents. If I go here, the price of the contract is $5 because it's right there. And it's going to be higher tomorrow because price fell. Look, these are more expensive because price is below them already. So let's explain now what is a put. Now, I gave you some terms. I gave you time, 43 days, January contract. I gave you levels, and I gave you the delta. Delta is the odds maker, okay? And we'll get to more about delta later. So what is a put option? So the put option is, let me explain it from the protection side. It's easier to explain. Let's say I own 100 shares of Chewy, and I wanted to protect them. And I'm going on vacation, and I don't want to be paying attention. I'm worried about Christmas, blah, blah, blah. For some reason, I need some protection for about a month, 2 months. So what I can do is I can go out and I can buy a put to protect my asset. So let's say I entered Chewy at $32, and I'm okay losing down to $42, but below that, I want to be out. So I'm okay taking pain from here to 42. So what I can do to protect my 100 shares, I can go out and I buy one put. Because every put, that's the other term I forgot to tell you about, quantity. So every contract, regardless of what it is, when it is, what ticker it is, 100 shares. Every contract represents 100 shares. So if I have 100 shares, I'll buy one contract. It's $1.59, but it's 100 shares, so it's $159 out of my pocket. What does that afford me? That gives me the right, but not the obligation, the right to sell my shares at $42 anytime I want. Anytime I want. So who's on the hook? Who makes that happen? Somebody that sells it. So there's another person selling and saying, okay, saying, hey, Nick, I got you. Anytime you want, give me your shares. I'll pay $42 for them. For that promise from them, I'm giving them $159 today. Okay. So I'm happy. I got my insurance. They're happy. They got their entry price at 42 if I give it to them. So the worst case scenario for me is drawn in the sand and I picked it. The worst case scenario for them is they own the shares that they want to at a price level that's much cheaper than now, and they got paid to do it. So they're not being idiots. They're not shorting the stock. They're not bearish the stock. I'm not bearish the stock. If I was bearish the stock, I would ditch it. I wouldn't try to protect it. Therefore, it's a win-win situation, and the broker wins. It's a win-win-win situation. So I'm getting my protection. They're getting an opportunity. They're not guaranteed to own shares at 42 and get paid for it. So their break-even price is 40-60, 40-40, because if they get assigned at 42, if I give them my shares at 42, they took my money, $1.60. So their break-even point is $1.60 below that. So it's 40 and change. So it's pretty good setup. That's their worst case scenario, is they own the shares and they break even just above 40. That's not bad. I got what I wanted. So it is, am I obligated to give them the shares? No, I reserve the right to give them the shares. So when can I do it? I'm going to throw another quiz. I bet you most of you are going to get that one wrong. Where does price have to be in order for me, the buyer of the put, stick them with my shares? I'll wait. This is going to be fun. Eugenia, you ruined it. Under 42 is wrong. So perception, I'll save us. Perception, no. Well, geez, no. Perception is that the price needs to be below $42 for me to exercise my right to sell my shares at 42. Not so. I, the owner of the put, can exercise my right any point in time. I'd be an idiot to do it if it's above 42. In fact, I shouldn't do it unless it's below 40. But they can assign you shares anytime. Price does not have to be below. However, if I decide to assign them shares right now, I give them an immediate $13 profit. Why would I want to do that? And I take a loss? No. So yeah, price can be anywhere. And so, don't bank on, okay, it's still above it, I'm not going to get a sign. In fact, if it's expiration day, they have until 5:30 that evening. So if after hours it falls, then you can get a nasty surprise. Anyway, just saying. So little nuances. Yes, Kadi, because you don't understand charts, that's what I do for you. I look at the chart and you tell me, hey, I'm looking to buy XYZ company. What does the chart look like? And I'll look at it and I was like, whoa, that looks pretty good because this and that, I'm going to join you with the trade, or no way I would touch it right now. Like people were going, what about QS now? What about UPST now? No and no. I shorted QS and I went long UPST like when it was in the toilet. So you should join just for that because you don't know charts. Trust me, you'll make it up.
Really quick, Nick. And if you see, we threw out a poll here asking Zingers here if they want to trade options full time. So about 47% said yes, and 53% said they're getting there. They need some sort of mentorship, guidance, education, trade idea, all that stuff that you give them basically all in one.
I appreciate those answers. So here's the advantage of trading in a group. You would be a better trader on top of the learning curve. Clearly, I am learning myself. That tool I just showed you that I got, I don't know harmonics very well. I know how to use them. I don't know how to draw them. They're very complicated. If you're not a specialist, you're going to spend your hours trying to draw them when you can just pay for a tool, study the tool, and use it on the fly. So I'm learning harmonics from people in the chat. I'm learning crypto from people in the chat. And I have a message to teach about crypto today if we have a chance. Trust me, we become better traders when we're accountable. It's easier for me and you to forgive our mistakes when we're trading alone. Oh, shit, I did this wrong. Excuse my friend. I did this wrong. But if you're in a group setting, you triple check everything before you post.
Really quick, Nick, just shout out to Lena for joining the newest member of the Options Inner Circle chat room.
Good job. Listen to Andre. Alone, I'm awesome. As a team, I dominate. Sounds like an alpha there. Oh, yeah? Well, that's nothing. One time on Bandcamp. Okay, so back to the lesson. Puts, it's a method, it's a contract that the person that buys it, they own the right to something, and that something is to sell an equity. They call it on Wall Street the underlying. It's the stock, the underlying, and the term expires in 43 days. So the value drops every day I don't use it. So when you buy an insurance policy, first of all, you're not obligated to file a claim. If you have a fender bender, I'm not going to file a claim, so that's why you're not forced to exercise unless you want to. And the value of the contract shrinks because if there's less time on it. So if you buy an insurance policy for a year, it's not going to cost the same as a month, right? So this has 43 days. So this cost at 42, $160. Remember that number, okay? So if I go to one that expires next week, 40, well, they don't have a 42, so let's go to December 23rd. Okay, so hold on. We'll pick a round number. 45 is $2 out there. If I pick 45, it's $1.50 for next week. That's still high. That's unusual. Oh, they reported. That's why. Okay, so that's part of the story I'm going to tell you later. So more time on the clock, it's going to cost more. As time ticks, it starts dropping in value. That's the whole point. Okay. So that's the put side. Now, I said you can short stocks without going out and doing it traditionally. So traditional shorting stocks is you think Chewy is going to fall, and you find somebody, you say, hey, you've got 100 shares of Chewy, lend them to me, I'll return them. Sometimes they charge you money for it. And so you take the 100 shares, and if you're right and Chewy falls, like if somebody shorted Chewy today, they borrowed 100 shares and sold them. They put the money in their account, 56. So tomorrow they can go out and return the shares, but they only have to buy them back for 52 to return them. So they buy 100 shares at 52, they return them, and they pocketed $8 difference, right? So, but if Chewy starts rallying, their losses are unlimited until they cover their short, if they're able to cover their short by buying the shares at whatever price. Let's say Chewy jumped $40. It's unlimited. It just happened. What stock just went to the moon on earnings? Somebody just jumped up like bazillion dollars. Anyway, so it is a safer way to short. CVS, yes. Okay, so it is a safe way to short. So the question comes up, do I need to own shares if I wanted to buy a put? No, because you said it's for protection, but I don't own shares. That's okay. You can buy a put to short the stock. Let's say I was guessing that Chewy was going to fall today. I would have bought a put. So let's see, I could have bought this put today or this put. Man, it's so expensive. Man, that's a bad example. But anyway, I buy any put. And if I'm right and Chewy falls, the value of the put will increase. Why? Because look at it. The higher you go in the money, this is in the money, whereas price currently is lower than the actual put. It grows in value. Look, the higher you go, it grows in value. So if price falls, you paid 160 and price falls, that 160 will turn into 2, 3, 5, 8, 11, 12, whatever. So how much money is that? So if I pay $160 to buy one put and then the stock collapses, that $160 can turn into 800, can turn into 2,000. I don't know, for as long as it's falling. Maybe it turns into 300. Then I doubled my money. What's wrong with that? Well, you can't do that with regular stocks, right? So even if you shorted, you scalped $5 yesterday to today. So this is available. It's like better bang for the buck. You want me to prove it to you? Okay. Today, Chewy fell 6%. So somebody that shorted Chewy yesterday made 6%, right? Somebody that bought puts in Chewy the day before yesterday to short, just like the people that shorted it yesterday, sorry, not the day before yesterday, made 40%. Look, the value of these options went up 40%. If you shorted it traditionally, you made 6%. If you shorted it using the options, you made 40%. Let me go and see how different it is. You made 60% if you use this week's contracts. So they are leveraged returns, like hot. Whoa, the market's falling even now. They just reopened the futures. Okay, so options are a better bang for the buck, but they cut both ways. So if you bought Chewy stock yesterday, you lost only 6%. If you bought Chewy calls yesterday, you lost 25%. See, it cuts both ways. So if you're not good with your entries, you have the opportunity to lose faster. All right. So far, we've talked about buying. Let's talk about selling. So one thing I haven't said yet, most options expire worthless. This is like the favorite sentence of all options instructors. Most options expire worthless. I challenge that statement, first of all, because a lot of options are spreads. And on a spread, of course, one loses, one wins. Are they counting spreads? I don't know. So, but let's say they're right. Why on earth would I want to buy options? I'd want to be selling them. And that's the way I like to trade. I shorted Apple with no money out of pocket. In fact, I collected $100 to be short apples. Okay. And I don't need a drop to win. I just need it not to go above yesterday's high. That's it. That's why I like selling stuff versus buying stuff. Let me use Chewy for an example. Okay. All right. So let's say yesterday you loved Chewy, you wanted to buy Chewy shares, or today you wanted to buy Chewy shares. I want to buy 100 shares. It's going to cost me 100 times $55. That's $5,500 out of pocket. So tomorrow I'm going to be down 8% on $5,500. So I've immediately participated in the loss. Not a cool way to start. Let's say I wanted to be long Chewy, but I'm nervous about the overnight action. I'm nervous about the next couple of weeks. How can I get long Chewy differently? Well, I can sell a put. What? Yep. So buying a put affords me the right to sell something, right? But the seller of the put is committing to buying the shares. So if I was going to buy them for $5,500 today, why wouldn't I want to collect money for the opportunity to buy them 20% lower? Doesn't that make sense? They're both long Chewy, one immediately, one not until it falls 20%. And if it doesn't fall 20%, I made money out of thin air. Let me show you. To show you that options can be safer than out-of-pocket stock. Okay. First scenario, you bought $5,500 for 100 shares. Second scenario, you do that. I do differently. I go out and say, I want to buy Chewy at 45. So let me show you where 45 would be. Here. You bought it here. I sold the put here. Okay, so that's the scenario. I collect $200, $220. You spent $5,500. That's the maximum I can make right now. Okay. Now the stock falls and it falls to $43 or $42. Now, what's the scenario like? You're down from $55 to $43. My trade, this one, is down a lot. Like percentage is like, whoa, what? Because I only collected $216 and this turns into $800. So if I wanted to close my trade, I'd have to buy it back. I'd have to say, no, I don't want to give you that insurance anymore. I'm panicking. I don't want Chewy anymore. Like I said, I wanted to. Nobody should sell a put if they don't want to own the shares. Did you hear that part? That's how you blow up accounts. Nobody should sell a put unless you want to own shares. So that's my goal. So I don't defend it. It turns into $1,000. Who cares? It's paper losses. The only way I'm actually out the losses if I panic and I say, oh, I raised the buy flag. I want to buy it back. Well, now the price is like this much and you lost $800. That's not cool. So here's what I would do. I would let it fall. And one day somebody will say, the buyer of that put will say, here's my shares at 45. At that moment, I wake up, that position disappears out of my account, takes away all the red that came with it, gone. It keeps the money I collected for it. I own shares at 45. My break even is under 43. So if the price is at 42, I'm only down 80 cents. Meanwhile, you bought shares. You're down from 55 to 42. I'm only down 80 cents on paper. That's it. So it's safer. The credit spread is the alternative way of doing it where it's a little bit milder. It's more conducive to smaller accounts. It's easier to swallow as a risk profile. So we'll talk about that in a little bit. All right. So somebody said it requires collateral. Of course. So does $5,500. So it does not require more collateral than buying $5,500 worth of shares. My watch thinks I'm talking to it. Anyway, so it is not riskier than stocks. You can deplete your money faster than stocks if you are irresponsible or unlucky, super unlucky. But if you have a good process, you should do okay. Can you touch on options for ETFs? Yes, you can do ETFs. I never sell a naked put in ETFs. I learned that lesson the hard way. I repeated it today. Somebody asked me about that. Why? Because I cannot explain it. I can compute the value of the bottom in Chewy and Apple. I can't do the same for an SPY or an SPX. What? No. Where do I find good potential selling options? Do I use some sort of a scanner? No. So I found that if you specialize in a certain set of stocks, tickers, you're better off specialize with 5 or 6 that you can nail every time, and then just repeat. That's it. I know somebody in my chat room, I promise you, he only sells SPX iron condors. I'll explain what that is. Credit spreads, credit put spreads, credit call spreads combined. Every week. He's 6 digits right now, like a high level executive digit amount of money he's made so far this year. And he's had a couple of blowouts, like a couple of weeks that were horrendous. Does it matter what his rate is? He made, $140,000. Does it matter? He uses the setups I give him. I'll get to that delta part in a second, Sui. It's not magic. It's pure math. I promise. The odds work because they are facts. So you will have losers for sure. And the actual win rate is 85 to 92% wins versus losses. But how you manage those few losses will determine if they set you back a lot or not. If you have a system, I promise you it works. If you don't, and you just go on emotions and what you hear in the news, I promise you will lose more than you win. Put and call cancel each other out, make the difference. Yes, iron condors or self-hedge. We'll get to those. They're pretty exciting. I'll show you. I did one recently in Boeing. I'll show you the results. I did one in Amazon. I'll show you the results. I may do one with the RUT tomorrow. I shared one with the RUT tomorrow. That's the small caps. That's high risk, but I'll show you. Oh, your mom? I hope she's okay. All right, good. See you. Join us. I promise you'll be happy. And you have 7 days to cancel, I think. Okay, so in the chat room today, they asked me, somebody jumped in and said, hey, what can I do with the small caps? I want to put a trade for tomorrow. I said, it's better to wait for tomorrow so you'd avoid the headline risk on the morning. But if you want to do it today, here's what it looks like. And let me see if I can find it. Hopefully I can scroll in. Shoot, that wasn't it. It should pop up. It was a picture of an iron condor. There it is. Okay. So at the time, an iron condor involves a credit put spread and credit call spread. I'll explain it in a little bit. But the bottom line is they collect $1 and they're risking 4. You're saying, what? I'm saying, hey, that's 25% yield in 8 hours. Tell me what trade you have that can do better than this. And each side has an 85% chance of winning. So yeah, that's a pretty good risk reward. But you have to have the stomach for it in one day. If this was a week out, I'd be comfortable for almost everybody to take it. But it dies tomorrow, this one. So if a mistake happens, it's going to be hard to fix it. So it pays a lot because it's risky. And look, it's a credit. When you open this trade, don't take this trade now, okay? So if you open this trade, you collect the premium. You don't pay anything. So you collect $100, you could lose 400, but you have an 85% chance that you're not going to lose. So 25% yield, 1 divided by 4. That's freaking amazing. All right. So what is the ideal expiration for selling puts? 1 week, monthly, or more? Chuck, that depends on your time frame. So I grew up in Beirut, so I'm a child of war. I grew up during the civil war in Beirut, like 12 years of it. So I reduce it to battles. You want to battle in the trench, you do the weeklies. You want to fight the fight with binoculars from headquarters, go out 3 weeks at least. You want to be like on vacation and trading, go out 6 months. I never let them expire. I almost never let them expire. These are specific questions for people who've done, or clearly you guys have done options. So the idea is, so this expires tomorrow at the end of day. Halfway through the day, if this turns into 50 cents, I'll buy it back. So I'll leave 50 cents on the table. I'll book my profit halfway. I'll forego the rest of my half. Depends. Sell when it gets in 25% of target price. Hey, you got your rules. if you have rules and they work for you, great. I'm not one to change your rules. What was my first ever options trade? SPX. That was the only one that was available, I think. You write call or put options more. I find myself going, not shorting stocks. So yesterday was a rare opportunity. I find shorting call spreads for balance. Like if I'm long a lot of stocks, I sell a call spread in the indices to balance.
Shout out to Emily for just joining here, guys.
Hey, Emily. What else? How can I grow 1,000 account with options? Get real lucky, Trevor. So if you're looking for a home run with $1,000, yeah, that's not what I do, but it's you're gonna have to be patient. $1,000, you're going to have to be really picky with what you do with it. And the cool thing is you can turn 1,000 into a big win, but hey, ask those who went from, I can't tell you how many people during the pandemic came to me and said, I want to learn options. I had a really good start because you bought in the pandemic when the market had just fallen 30% or whatever. So anybody that did anything won, but that's not modus operandi. So they took 500. It's weird. They all used the same amount of money. So it's like there was a meme going around and they were using it. They would come to me. I forgot the numbers, $540 into $42,000. And now I'm back down to $2,600. It was almost to the penny. It was weird.
Hey, Nick, really quick for Lena's asking, is the 1297 good for 1 year or life? Lena, that is a lifetime discount. So that means that next year, instead of, even if the price goes back up to the full price, 6,000, you still pay the 1297. So that's 78% off is every year renewal. So the discount is applied basically year after year.
Chuck, 1 week. I published the Iron Condors on Friday afternoon. I don't know what time he takes them, but that's the information he uses. And he changes it according to his taste. I don't like to do $10 wide spreads, especially not on weeklies. I think that's what he does, but I give him the lines. The odds of success is the same, whether you do a $5 wide spread or a $10 wide spread. Okay, we're getting too wonky. People who don't know options are getting bored. Like, what the hell is he talking about? Okay, so we talked about put sides. Okay, so Mark, we can work on that. So we talked about the put side. So that's what the definition of a put was. Think about it as insurance. You can use it to short stock. You can buy a put. I'm not going to talk spreads right now, so not to confuse the issue. That is either insurance or you're shorting stocks. Because if I buy a put, stock falls, I make money on my put. Put gets more expensive, I sell it. I don't have to buy stock. I just sell the put. If I bought it for $1.60 and the stock price fell, and it turned into 300, I sell it for 300. The difference will be the plus. Okay, so on the call side, so what are calls? We know what put are. They afford the buyer insurance. They afford the buyer the right to sell the stock at X. Okay, so on the call side, who buys calls? All right, let's say I wanted to buy Chewy today. I said, "Ooh, shoot, they announced earnings tonight. I don't want to put $5,500 on the line right here. I'm going to put $500. So what they would have done, they can buy a call. Okay, so one call, again, how many contracts is that? I mean, how many shares is that? A call represents 100 shares. So what that affords them is the right, again, not an obligation. Anytime somebody buys an option, they take control. The seller of the options hands over control to the buyer. So this affords me the right to buy Chewy stock at 60. I chose 60. The price for it today was $467. Anytime between now and 43 days. Chewy, I can say, I want to buy it now, even though Chewy is at 52. They'll give it to me at 52. They'll be happy. They'll send me a fruit basket too. I'd be an idiot to do it. I should wait until it goes above 60 to exercise my right. But I own the right to buy it at 60. So these guys tomorrow are going to lose money because price fell. So currently I'm looking at after hours, $52. So price fell considerably, 7%. So the value of this is going to be less. How much less? I don't know. Let's say 300, 200. I don't know. So they lost $200 on that call. But did they? Not yet, because they want to use it to buy shares. So let's say Chewy bounces and rallies through 60, then they own the right to buy it at 60. At some point, they may decide, you know what, I don't want that anymore. What do? They sell it to close it. They get rid of the call. I don't want that. So maybe it is lower, maybe it is higher. That would be the only money they lost. Let's say tomorrow they wake up and Chewy is down and it turned into 200. They say, thank goodness I'm out of Chewy. It only cost me 300, as opposed to deploying $5,500 and I'd have to deal with that. Okay. So that's who buys a call. Never do this. Sell a call naked. What is naked? Sell a call without owning shares to back up the call. Because when you, the seller, sell a call, you're saying, I got you. Anytime you want to buy Chewy at 60, I'm your man. Well, what if Chewy has like a CVS response? What if Amazon goes out and buys Chewy for $80 a share? You immediately lost $20 immediately, because you have to deliver the shares at 60. You say, I'll stop out. Can you stop out of a headline? I challenge that. Shares like GME, you can't find shares to buy. They call them hard to borrow. When you go to short something, it'll be like a hard to borrow note on it. Don't ever sell that call. And you shouldn't sell any call naked, any call. So who sells it then? If I own shares at 30 and I'm okay parting with them at 60, I can sell a covered call because I have shares. It can go to 1 million. All I have to do is say, hey, take my shares. I don't have to go out and buy them in open market at 80 or 90 or 100 or 70. I'll just say, take my shares. They are covered calls that I sold. Totally okay. In fact, really smart. That's how you create your own synthetic dividends. We can work on that too. Okay. So now we defined a put. Now we defined a call. There's something called a call spread, a put spread. What is it? It's just two pieces. You literally spread the risk. Okay, so let's look into it. You can, absolutely. So instead of buying a call, like I just said, I buy a call and I sell a call above it. Why would I do that? Well, I lower the entry cost. For this, I only spend $260. So what does that give me? I'm long here. I stop being long here. So if Chewy goes to the moon, I have limited upside, but it's not so bad. I turn $265 into $1,000. What? Yeah, one contract costs me $265. And if indeed it goes through 70, I can turn it into $1,000. That's limiting my upside. I'll take that any day. So what's the advantage? The advantage is I'm spending less. I would have spent 500 almost. I'm spending 265. The advantage is if we have a bad day, instead of losing 25% like these people lost if they bought one leg, you lose less out of pocket. So red days are less painful in general out of pocket. All right. So far, are you guys confused or is this going well? Keep it clean.
If you guys are enjoying the session,
all right.
If you're enjoying the session, guys, put a 1 in the chat.
There we go. Keeping up. Thumbs up. Cool. Okay, good. All right. So see, plain simple English. Confused. Christopher. Honesty. I like it. All right. So I keep reverting back. So I keep repeating the same things to circle back around. Okay. I'll try to unconfuse you at the end. All right. So the spread is just merely taking two pieces to take the same position. They are both bullish. They both need a rally to win, to produce profits, just like buying shares. One commits me to getting long a stock. One commits me to delivering stock. So it's spreading my risk. That's called a spread. It can happen on the put side as well. So if I take it to the put side, I have to flip this sign. Okay. So if I wanted to not just pay $200 for this one, I can, be short Chewy here, be unshort Chewy here. So this one is a bearish position that would have cost me only $84. And if Chewy falls to 40, down to $40 per share, then that $80 turns into $1,000. Clearly, that has a lower odds of success because it costs a lot less than the other one. Why? Because I went further away from current price. So if I go higher to make it less of a coin flip, now suddenly, it's getting to be. So somebody that bought this yesterday will have profits tomorrow morning. If Chewy opens up at 50, they will have considerably more than $130 that they paid for today. This will be probably $300 tomorrow. I don't know. And what they would do is they would sell it to close it tomorrow. They flip the sign, they sell it and collect the money they could get for it tomorrow. And if it's more than $130, they made money. Okay, so that's a spread. Okay, we saw the debit call spread, the debit put spread. We also debate, I share videos about doing call calendars and call diagonals. Let's get into the fun part. So I told you there's something funky that went on with Chewy today. All right. So check this out. There's one column we haven't talked about yet. Okay. Let me go to January again. So I defined the delta and we defined the price. So this column here, implied volatility. You've heard it. Implied volatility. They call it IV, the IV crush, IV, implied volatility. Let me define, first of all, implied volatility. If you know what the VIX is, it's basically how nervous is the market about this particular option. Okay, this particular contract in January. How nervous are they? It's really important that I said this particular contract. Check this out. What number was that? You remember those numbers? Keep those numbers in mind. 110, 80, 100, 80. Let's go here around the money. It's 80, right? Implied volatility is 80. Let me go to December next week. Whoa, 150. So they're more nervous next week. Check this out. Boom, 350. What? So let me explain what that means. Because of the earnings today, this option is extremely volatile. So everything here is 60% more expensive than it should be. Actually more. It's 2 times more expensive than it should be. So this should be 100, 110. So if I paid $4 for this today, under normal week, this should be like $1.30, $1.40. You want to see a visual representation of it? They have I hope it works. Okay, there. So this hash line is normal nervousness. This is this week. See the difference? So somebody that bought options for this contract doesn't know anything about options. Because if you look at this and you say, it's still okay for me to buy it, what? You're paying like 3 times as much as you would under normal circumstances, and you want to buy it? No, that is a no-no. Even if you guess right, if you bought this put tomorrow, you're going to lose money. How could you? The stock is dropping 8% because 60 cents is going to disappear just from open because the event is gone. So this tomorrow is going to go down to here. And, this is going to turn into nothing. This is going to lose a lot due to that deflation. If it continues falling after lower than this afternoon fall, okay, maybe you can eke out a profit, but I doubt it. Okay, so the implied volatility is important. Don't just buy. Look at the implied volatility. If you go to buy something, you go, whoa. So how can you change that to your advantage? Just knowing it's there, you're not likely to make the mistake of buying. So you do a spread. So the spread takes that away because the spread is 2 things, right? One you buy, one you sell. So I'm buying this, I'm overpaying. I'm selling this, I'm over collecting. They cancel each other out. Anything I buy around current price is going to cost about half the width of the spread. So if I buy this one, it's going to cost half the width of the spread, 50 cents on a $1 wide spread. So whether the implied volatility is 1,000 or 0, it's going to be 50 cents. So that's why you neutralize that. That's one way. The better way is the more fun way. Sorry, I didn't mean to do that. This is to play with time. What? Let's do it. All right. So this is this week. This expires tomorrow. This expires in 2 weeks. Contracts. One has an implied volatility. The one out in time, 2 weeks, 120. This one is 350. So what I just told you is these are super expensive. These are normal rate-ish. So if I wanted to buy a call in Chewy today, what I would have done is I would have bought my call, say 58. And I would sell one for tomorrow. Why would I want to do that? Because this one is going to die 2.5 times faster than this one. And this one's going to get imploded tomorrow. So if I buy one here and I sell one inside this super expensive one, tomorrow I'm going to have an edge. I own one that's going to move a lot slower than this one that's going to die really fast. So that's called a calendar this way. I buy the 58, I sell the 58. That's called the calendar. Or if I move it, I buy the 58 and I sell the 58.5 or 60 or 65. It's called a diagonal because I'm jumping time and I'm also moving sideways in price level. So that's another way of doing spreads out of time. Like one has 14 days, one has 1 day. You have to be careful not to do this. That opens up unlimited risk because I'm short out in time and this dies tomorrow. The broker would not let you do this if you don't have a large account. This, okay. Be long out in time, be short, shorter in time. This way, this one dies first and you're protected. Okay, that's a fun thing. To notice the implied volatility, then you make fewer mistakes. So that came up today and I came up with a weird trade. I don't know if it's going to work out. It worked out before. It's like a double straddle thing. So somebody said, I want to buy a straddle. And I was like, no way. Because it's so expensive. So the straddle is people do this. They buy the call and the put at current price. So then they don't need it to rally or fall. They need it to move big. Either way, then they make money. Well, in this case, they needed it to move $8.50 in order to start making money. That's a tall order. It's not doing that after hours. It's only moving $4. So if somebody did this yesterday, they're going to lose their shirt tomorrow. So what I said, instead of doing that, you can do that, but why don't you do it differently and sell these instead of buying them? What? You said not to sell naked calls. No, we're not going to sell naked calls. And buy these out there. This is not a trade recommendation. This is just a fun trade I came up with today. I don't know what to call it. Put call. Okay. So they wanted to buy these. I said, don't do that. Buy these. And these cost about $10. $10.50, I think, at the time I looked at it. But you're saying these cost $8.50. Yes. So buy these, sell these. So now the out-of-pocket expense is $2. You see it right here? So tomorrow, these will die much faster than these. So it's almost a no-lose trade. So I can probably eke out a quick $2 win tomorrow at the open by closing this whole thing. So that would be something fun to do. But don't do it unless you know what the hell you're doing, because that's how you can get in trouble. I said, take it on paper and see how it works tomorrow. That's kind of a fun thing to do. So tomorrow...
That's one of the benefits here, Nick, that a lot of traders that are doing options, they maybe only do calls and puts, and that can be obviously, very volatile, right? For an options trader.
Yes, it is volatile, especially if they don't have a system. I know a lot of traders that have systems and they succeed because if you have a system that's not working, you're not going to continue doing it. You keep tweaking and tweaking and tweaking. And some people lose thousands before they get to a proper system. I share mine. So which percentage is optimal for implied volatility? Ross, that's a good question. So it depends. Apple is like normally 25, 30%. If you see Apple at 50, 60, that's not normal. So it depends on the stock. stock like GME is probably runs hot, so to speak. So let me go see the GME report. Did it have anything going on today? How about AMC? I know AMC did not report. It too is a while.
had earnings, I think.
So AMC runs hot. So it runs normally at 140. If you go to Intel, it's probably in the 30s, 20s. So boring stock like Walmart will be probably also low. So there's no number that would work across the board like teams. See that? So I can't say 50-70. 50-70 is super cheap, super low for AMC, super high for Walmart. So it all depends. I'm telling you, I sounds like a salesman thing. I trust. Hey, I'm busier than crap every day. I promise you that. So it just works. Trading in groups totally works. Fewer mistakes, guaranteed. Guaranteed. I can't find enough premium to justify the trade for me. Then you're looking in the wrong spots, or you're wording it wrong. Give me an example. What ticker? NEO. Okay. Good company, by the way. If you can withstand the volatility, the overhang of Chinese headlines, but I believe NEO has help from the government. So the odds of the government going after them, well, I don't know. I don't know enough about the delisting process. So, okay, Palantir. All right. NEO, Palantir, I would sell credit put spreads in them. And the fact that you can't find any, are you looking for short term? Because here's how I would trade it. On bad days on NEO, I would go out and sell a put spread. On Palantir, I would sell a naked put or put spread. I can tell you on this day, I sold put spreads that paid me 50% yield, and it was at $18, which would have been a gift. And of course, I won on that one. If I had gone down to a reward of 15%, it would have been a slam dunk as well too. So I don't know how you can't find them. I promise you they're there. And the risk reward, let me reword it. If I collect 50 cents, okay, let me show you. All right. BA maybe. I did an iron condor on BA. It was December 31st, I believe. I'll show more legs. Okay. We'll go to 215. That's still not high enough. Okay. 20. Okay, now we can see it. All right, so I took a bet on Boeing. It had 4 legs in it. It was an iron condor. I'm going to reconstruct it for you and show you visually. I can't remember exactly when I shared it. It had a video in it and everything. So the bet was to catch the falling knife in Boeing, and it was to sell a put spread. This was the put spread I sold. And for that, I collected 90 cents total. I think $1 was the optimal spot, but let's say I'm going to say collected $1. So for round numbers this way, it makes it easier to explain. So I collected 50 cents here, 50 cents there. Each side had an 85 to 88% chance of success separately. Okay. So then the stock spiked one day. I can't remember on what, into 230 or 220. I didn't capitulate because, this side got underwater, got under fire. This side won overnight, was winning. So I wasn't too worried. It was self-hedged. And then the market corrected last week, quote, almost crashed. Boeing got tested. This leg got tested. I think Boeing fell to 190 or thereabouts. I didn't close it because it was still, barely red, and I had time on the clock. Sure enough, it bounced. Today, this morning, this was 30 cents to close, and I took some off. I bought some back. I still like it. So I don't know. I mean, there's plenty of trades like this where I'm collecting, if I win, 25% yield on my risk, 25% in about 30 days under, and each side has an 85% theoretically of winning. What was BA at the time? I I could look it up. I just don't remember. But I can guarantee you it was in the middle of these two. So somewhere in here. Because I collected 50 cents here and 50 cents there. Therefore, price must have been equidistant from those two.
Hey,
Somewhere
Helmut,
in the middle.
to answer your question, Helmut, it's going to be the same. So the price is going to stay the same. It doesn't change when you're in it.
Yeah, I don't know where BA was. Anyway, it doesn't matter when. It was in the middle, the price. So you can eyeball it exactly, not exactly, but about where it was. Let me see if I can quickly find it. Okay. Somebody asked about Baba. I'll look up the trade there too, because I had one. Wow. Yeah, I can't find it right now. Anyway, Baba, what a sad story, right? This is a company that is super successful. They have revenue growth like you wouldn't believe. They can bring in over 100 billion in sales in one day. I mean, who can do that? Apple can't do that. And then the headline debacle. So the credit put spreads there are tricky because of that headline overhang. Fundamentally, they're slam dunks, but I stopped saying, okay, I'm going to go on one more time on a credit put spread. Although the last couple worked, but like by the skin of their teeth, so to speak. So I finally said, you know what, last week, the day before it popped, I said, I'm throwing one last chance. I'm spending $100 on Baba calls and that's it. And sure enough, the next day, boom, market rebound. That yielded some profits. I was like, okay, moral victory. So there's some stocks that go into dependency box saying, I can't do credit put spreads. You asked about NEO, almost in the penalty box. I don't want to take a trade that fits my parameters, that has 85% chance of success, and then me finding out the next day, oh, there's delisting rumors about NEO too. Yeah. So if NEO loses 29.60, it's going to 22.50, if not 20. So the trade is wait for NEO or sell an iron condor to lower the risk, or buy a debit call spread with finite amount of money, not all in, to try to eke out a profit there. But because of that headline overhang, NEO is a special case. I would get long it if it drops. But technically speaking, if it loses this, it's going to 22.50, if not 20 or 18.50. How do you find support zones? I look left. So this was the last bounce. So it should be support. That's the, if it's falling again, the assumption would be this is support until the bears take it out. So ideally, if you are a bear, here's what they're thinking. So first of all, they have had a decent time making lower highs. That's normal. The bulls are also making progress by holding the line, right? So you see the range of trade, the battle is shrinking and shrinking and shrinking, and it's going to come to blows somewhere in here. So that's the big picture. Now, if the bulls lose footing, which is this guy, which is the same as this guy, which is the same as that guy, so it's got history. If they lose that, that's a significant loss. They will capitulate and the bears will overshoot. Technically, it's about this big, right? So this is improbable, except for delisting. And therefore, they're probably going to stop somewhere here because that was their prior bounce level. So this is an improbable scenario, yet it exists. And what if they break upside? Okay, so the battle is upside then. The upside scenario would be the bears are making progress. These guys hold the line. So you start see them make progress of their own with higher lows. They tried it here. They tried it here. And then they make higher lows and they're tackling the failures, higher lows. They come to blows here somewhere against this level. So that 40 is significant. You go above 40, you move the battle zone to this area. You see my alert? This is where I chase it long. From momentum perspective, that's a significant win for the bulls, just like this would be a significant loss for the bulls. And they might shoot to 52.50 and maybe even 55. But that is an exit point. So you take it one line at a time. So how do I find support? Look left. If we're here, if tomorrow the stock starts falling and you ask me, hey, where's support on Neo? I'll say your first line of support is right there. Your second line of support is here. And the third one is here. These are prior bounce levels. And I'll say, if you're long Neo and you lose this one, stop out. You don't know where it's going from here. It could be here, it could be here, it could be here. I don't want to find out. I'm out. I'll re-engage long lower. So hopefully that answers Neo. So Neo is a good company that has overhang risk from headlines that have nothing to do with its own business. Unlike Luckin Coffee, remember Luckin Coffee? It got delisted, but it actually was cheating. So they were actually doing 300 grand. Holy crap, baller. A credit spread on a $5 white spread, I will take as little as 50 and not more than 80, because 80 cents on a $5 white spread. Because think about it this way. If you get to collect $1 from a $5 white spread, you're going to have a reward of 25%. Have you ever met an easy 25% win? No, there's going to be drama. So if you want drama free, you take 50%, 50 cents, because that is an 11% win, which is not too shabby if you make it every week or every month with 85% odds. So the odds on the dollar collection on a sold spread of $5 is considerably lower. So the drama is considerably higher. You may still win more than me. You're risking more. So I risk more money at a safer distance versus risking less money. Oh, let's explain it. I'll explain it. Risking less money at a coin flip toss. So I told you I shorted Apple, right? Yesterday, I think. Yeah. So Apple, let's go to a 5-minute chart. Reset. Why is it not resetting? 1 minute? Okay. So this is a 1-minute chart. Pretty busy, but I wanted to get. So the 9th, what is today? 9th. So I shorted Apple very mildly. So what did I do? I said, you know, I see downside pressure from the open interest. Oh, I forgot to define that for you. Open interest. So the options, I read the options to see what's in there. And I thought that it's easier to fall and it's going to be harder to rally through 175, right? So I said, I'm going to short it at 175. So what I did is I sold the 175 call, but not naked because I'm not crazy. Actually, wait, that's right here. And I sold it, so minus, collected money for it. And I bought the 177.5, which you can't see up there. So my max risk is $2.50, right? That's the width of the spread. If it goes to 1 million, that's the maximum loss I can take. And for that, I collected $1. It's actually a little bit more. I collected $1. So the maximum I can really lose is 150. So if I did this one time, I'm going to make $100. I could stand to lose 150. Now, this is a binary bet. I drew the line. I didn't leave a room for error. I said, this is it. I need Apple to not rally through 175. My break even is 176. This is my break even right here. And that was the best burst it had yesterday or today. So if Apple doesn't fall, I make money. If Apple rallies a little bit, I make money. If Apple closes anywhere below 176 tomorrow, I'm making money. If Apple closes above 176, I start losing up to 150 per contract. So that's the bet I took. And this is what it looks like in options. So let's go there, Apple. And you can track it tomorrow. You can say, that idiot lost money. But it was a small bet. I don't like shorting companies, I promise. But I made it. So this was it. Trade. Okay, so as of the close, I'm up 20 cents, just about. So this is my trade. I sold this, I bought this. I sold this, opens risk. I'm short the stock. I bought this, I limit myself. So if we open tomorrow and Apple is at 180, I'm not short Apple. I just had maximum loss at the expiration if it closes at 180, and my maximum loss is 250 because this is it. It cannot be more than $2.50 wide, right? 175 to 177.5. If I had done this, it would have been $5 wide. I did this. I collected $1. I'm risking $1.50. Donald, you have a system, then you're in like Flynn. So this, like tomorrow, if it drops to 50 cents, I may choose to close it. What does that mean? It means I booked half my profit and I forego the rest, because nothing worse than trying to eke out the last minute profits and then boom, it does one of these silly things. I mean, what is that? What is that? If you looked at that time right there, there were 800,000 contracts that happened yesterday out of the blue. And this happened. It's like somebody did a buy right strategy. They bought shares and sold calls right away against them or something, because that was unusual. I was like, what the hell is going on with Apple? And that's when I shorted it. That's why it's green today, even though it's not that much down. So back to the table, I said I didn't define open interest. Sorry about that. All right, so my columns, and these are the ones I watch. So we have mark, which is the middle between bid and ask. I don't bother putting bid and ask because all the tickers I trade are liquid and everything's going to fill about the price of between bid and ask. So if I go here, bid is 24.50, ask is 24.80, somewhere in the middle is going to fill, plus or minus a penny or two. So I'm not too concerned with what bid, what ask is. Mark change is the change, what happened from yesterday. Delta, super important. And I'll get to a point as to, you've heard the in the money leaps. If you watch CNBC, he used to say, what's his name? Kramer, chief clown in charge there. He used to say, it's okay to buy in the money calls leaps, right? Out in time, in the money calls. And I'll tell you why in a second. Super important nuance. Let's see here. The mark change in percent, this should be here. So volume and open interest, what's the difference? Okay, volume is what happened today. Look at that, 200,000 contracts, 250,000 contracts, 200,000 contracts, 50,000. And if they say most options expire worthless, isn't that most options? So what are the odds of Apple being over 175 tomorrow? If that's most options. Like anyway, besides the point. So this is what happened today. So what's this number then? This is a static number. All day, this did not move. When we opened in the morning, this reflected what happened yesterday. And this was zero all around. And then these started moving all day. This does not move. So tomorrow morning, this will update with these, and these will click back to zero and will show us. So volume is what's going on today. It moves. This one is static. They update it overnight. And tomorrow when the market closes, these will update on Monday morning, like Sunday night, overnight, they update them, refresh them. That's called the open interest. Now, if you're savvy enough, you can look at the open interest and see where the money is. And you can almost, somebody said unusual options activities. So I caution against using those unless you're tapped into pretty close to the source. Like maybe that person does their own homework. If you're using unusual options activities from Nigerian brothers on TV, you're too late. You're buying their profits. So that's not the one. I bet you the person that said that they've been doing it for a decade, they actually have a system where they either pay for a source that scans for them or they have it themselves. The tools are out there, totally doable. I'm on board if you're early, but if you get it from TV or a friend of yours posted it on Twitter, way too late. You are the last person holding the bag. So be careful with these unusual options activities. I find unusual options positions and it helps us. Like before the correction, I said, whoa, we have so much downside pressure from the SPX. inside the options. They say, what do you mean? What positions you're looking at? I was like, not positions. I have a giant spreadsheet that I download the data and I put my own math on it and I represent it via charts to myself. And I check that every day. And it looks like the market makers would want to whoosh down here soon to hand over their losses over to us fools on the street. So, and more often than not, sure enough, you get one whoosh, and then suddenly everybody rushes to buy puts on Friday. What we were doing on Friday was getting long the stocks because that's when everybody capitulated. My alert service is worthless. No, you misread what I said. I said, if you're trading unusual options activity, which requires you to be early, my way of trading, you can be a turtle and still be okay because I like to fight the easy fight. And my service is not a trade alert service. You missed the whole session. It's about learning a process. I'm going to teach you to find a good fishing pole, teach you how to use it to find your own fish. It's not a trade alert service. If you're coming in just for the trade alert service, there are better people out there than me. If you're coming in to get that and learning the method yourself and find your niche, that's me. And I challenge the charting abilities of the best chartists out there, and I learned it on my own. Plain, simple eyeballs. I'll prove it to you. Hit me with ticker. Let's do fast fire. Come on.
It's official, Nick. We're doing the fast fire.
We're doing fast fire.
All right, all right. Let me stretch. I didn't know we were gonna go in so hard here. All right, guys, throw your tickers.
I got challenged.
Just go out. Just go out. Pins. Let's go, Nick. Let's do it. Pinterest. PINS.
Hold on. I'm getting a swig. Like, what does he have in his drink? Okay, Pinterest. So lesson number 1. This is a daily chart, right? And it is 12 months. First of all, I can't see when it was there last time, correct? You can see I have an alert here that says get long Pinterest, and it hasn't fired yet, but it's pretty darn close. So in order for me to give more opinion on it, I have to expand my time frame. So the daily chart is not good enough. So I have to expand my time frame. Okay, now I have a better picture. So IPO, weekly candles, by the way. Every candle is 1 week. IPO, rally to the moon, crashed, rally to the moon, crashed consistently at the same place, right? Remember those wicks? Those are rejections. Wicks means during the week, they went up to here and they failed. They went up and failed several times. So this is like a month and a half of failing total combined and months apart. And then crashed. It took it, what is that? A year, 2 years to come back, fight over it for another month and a half, and then finally break out to the moon. And just now they're coming back into this. If you're shorting Pinterest here, you're shorting the entire market. Or you know something coming up that's going to be horrendously bad. Because just from the chart, this is not a place to exit Pinterest. This is a decent place to try a long, but not all in because of the overhang of the entire market. So somebody just said, I'm interested in doing swing trades instead of day trading. Yes, Soham, that's what I do. Okay, so I don't have time to be active intraday. If I did, I would only trade the futures without holding anything because I'm pretty darn good at reading 30-second charts, and it's almost a no-lose situation. And if you do lose, it's 2%. You either get your run in the futures or you lose 2% because you put stops right away. Okay, so that's the over. Now I have an idea as to where it stands relative to its own self. Okay, one concern is that giant candle, too fast in 1 week. That's just too big. There must have been an earnings report or something. Nevertheless, this is a long consolidation period. So the risk is at this level, there is a giant risk. So I have to put a stop loss. As much as I like the level, let's say it bounces. I guarantee you sellers here. I guarantee you an attempt to sell in this zone as well. So let's say they do show up and the bounce does this, and then something happens in the market, and for some reason they come back and retest this level, right? So now we have history, solid, and you lose that level, goodness. improbable scenario, just like the other company. What was it, Neo? Improbable scenario, because technically the experts out there will tell you the drop should be as big as this guy. So this is where you say, what, now if I look here, look at all the volume, this orange line. So there is bulletproof support here. Now this is if this happens, if this fails, and they go there. So if I usually buy 100 shares and I trade equities, not options, looking to swing trade equities, this is a decent place to start long pins in this zone. And when do I add? I don't like to average down. In fact, I don't know one professional trader successful that averages down ever. They say don't average down. So I give you a different word, average in. What does that mean? What's the difference? Okay, if I usually take 100 shares of anything, 10 contracts of anything, averaging in means taking half, partial. So if I take 5 contracts, 50 shares, 40 shares out of 100, then I'm not averaging down, I'm averaging in. I wanted 100 shares, I took the first batch here, and then it took a dump. I added the rest here if I still like the company. That's okay. But to take my entire risk here, 100 shares, and then it does this, and then I add, I just doubled my problems. No, not cool. You change your risk profile. Remember, first, you determine how much money you want to lose. And if you determine it's $5,000 and you only deploy 2,500, okay, you can deploy the second 2,500 later. But if you say $5,000 and that's my maximum and you put it all in at one place, you don't add to it. You moved off, you manage the percent. That's it.
Nick, and somebody's asking if they are learning options and they're trading stocks right now, would they benefit from the chat room?
Yes, because this is where you can go in and say, usually I would buy 100 shares. How can I do this with options? Right? Wouldn't that be the question you would have? So, I mean, the blend that we have in the chat room, I have people in the chat room that only trade equities still. I have people in the chat room, I want to say about a dozen, that only trade futures. And I have few that do options, and most options traders do futures trading if they've been in the game for a long time. The futures trading is a complete animal all by itself. So I don't go there. I go one-on-one with these 12 people-ish because I know they know what I'm saying, and I don't have to worry about saying something that can be taken the wrong way. Can you do that one more time? On what, Christopher? The averaging in part, or?
By the way, guys, the replay is going to go to the chat members. So for those guys that are joining, you will have access to all of the workshops that Nick does, not just this one, but all the prior ones as well.
Okay, so back to Pinterest. We haven't come to a conclusion. We have now an idea. It is a place of value. There is downside risk, technical and fundamental. The stock market is still near all-time high. We've got all kinds of crappy stuff going in the air right now. So it is conceivable that the whole market corrects, and it will drag this one as well. I should not be all in. So if I usually do 10 contracts, I should take a partial position or do an iron condor instead. So now back to a daily. Now that I have a big picture. Now from the daily, I can tell you 44 is going to be sold. In fact, the sellers should show up around 43.20. That's me reading the chart. That's what the machines have been doing. They've been selling every pop, right? So that's the first place they would sell a pop. Now, if I'm actively trading, not swing trading like for a while, then I have to get into more granular information, maybe a 2-hour first. So here's the good news on a 2-hour basis if I'm actually actively trading this sucker. So I would assume that this was a base and they're making progress. So I'm watching a few lines. One line I'm watching is this one. So a pop above this one should give them a target of here. But in this case, it has immediate resistance here, a lot of resistance here, and this should be your target. So what you want to see is higher lows attacking a neckline, and then finally you pop above the neckline, they come back and test it for footing, and boom, they target this one with resistance, bigger resistance, and repeat the process over here. Continue the progress, higher lows, right? So now they got here, they fell down here, that's okay, that's okay, that's okay, and then repeat the process. Same battle over here. Pop or drop one more time to take that over. Charts are super simple. Notice I don't have MACD. I don't have anything. No RSI, nothing. So this is important. This is called the volume profile. If you want to learn a study, spend some time on this one. It's very simply, if you heard a few memes on Wall Street, price is truth. Well, this is the only place where it shows you that. That's the only place. So you're saying volume profile, volume is down here. Okay, so this down here tells me when the volume happened. Then you have to go and find out exactly at what level. That's what this is. This is the same information as these guys down here, the volume bars, except it tells me at what level. So for this period of time, from middle of early October to now, 45.70 is by far the busiest spot for the stock. What does that tell you? If the stock starts rallying and you go buy shares at 45.70, you're not paying attention. It's going to hit it like a wall, and actually like a mattress. And it's like you're on a bicycle on pavement and you hit mud. You're going to go, slow down, because this told you they were super busy by far. Look at the volume bar at that level versus the two next volume bars. They're not even, it's like somebody giving you the finger. They're not even close. So they're going to be very busy. So if the buyers are overwhelming, the buyers are overwhelming the sellers, everybody's going to come to blows over here, and it's going to be congestion. Overhead supply, I think they call it on Wall Street. It's just logic. Just look left, get one tool or two, specialize in them, ditch the tools you don't use. I tried to use MACD in the olden days. I found it's great hindsight, but when I go to trade it, it doesn't work well. Maybe now I can do it because I got better, but I'm not bothering. I love the lines I use, which is eyeballs to find the levels. Nothing beats levels. Nothing beats level. Like breaking out of this, there's no doubt about it. Breaking from a trend line, you can draw a trend line however you want, to say whatever you want. So I don't trade trend lines. I watch them, but I don't trade them. I'll give you an example. So if somebody connected these two dots, whoops, sorry about that. The breakout started. Meanwhile, they get to here, they hit a wall, because that is a wall. Somebody that could, at the same time, connect two different dots, and they started here. They're suddenly so subjective. Levels are absolute. There's nothing subjective about it. In fact, this level, look, if I extend it that way, it was significant before, and here. So
hey
it's
Nick,
easier. Yeah.
I'm not sure how you are with time. I know you've been here already for about 2
I'm
hours.
out of energy, but I'll do what you need me to. So
yeah. So I know you wanted to go over a couple tickers. So let's just go through those tickers, get some closing remarks, and then
yes,
I'll just stay a little bit answering some questions on the chat room after.
All right, hit me another ticker. KNDI. Baba, we already did. What is KINDI? No, I don't remember this. Well, let's see if I've never looked at it. Nope, no lines for me. That's my first time looking at Candy. What is this? Engages development, production, distribution. Oh, EV products. Do they have income? Yeah, they do. Interesting. All right, so let's go to weekly, get an overview. Oh, monthly. So they've been around forever. So this is 2007 to now. They keep coming back to the same place. So what's wrong with this company? Why can't they hold up here? So first things first, too late to panic out. Second, the stock is broken. You have to do homework to see if the company is broken. There's I don't know where that low was. I have to scroll back. Okay. Wow. Wait, is that a SPAC? Did they jump into somebody's skin? It looks like it. Anyway, so whatever that is, it's back to that same base area. Yeah, you're going to have to do homework. The stock chart tells you that it's too late to panic, but it's back to base that has been here since 2007. So clearly it matters. If I'm long, I'm okay. Maybe I catch one of these super spikes, but you're going to have to fundamentally do homework. And if you want me to give you a number, 4.5 is not to get long. Wait until it clears at least 4.7, or even better, 5.2, because then you can get to 6 or 650. But these two candles, wow. I mean, what? This is your, draw a box around here, and you will get to your battle zone. Right in the middle is the highest point. Look at all this volume. Yeah, that's going to be difficult. And they're going to start selling it as soon as they get to 4.2. All right, next. Let me see. Somebody said Lucid, I think. Disney, Roku, Space. All right, let's go. Space, buy it for the long term. Don't even bother. Disney, it is speculative. This is Disney. I have lines. I noted a long in Disney opportunity here with a tight stop because it has frothy ticks below. Let me see here if I can show you. Zoom back. See, these, they're not a good base. They're below here. So this is a bounce level. So you want to stop out here. If it ever comes back to here and you're still long, regardless of from where, you should consider stopping out. I usually say, uh-oh, it's a bad scenario. I don't think it goes there alone. The market has to correct. Now, it's going to find sellers into 160. So if you're looking to get long, this is not the right place. This was the right place. How would I get long now? If you force my hand, I'll sell a put spread down here, which is a bullish position that does not require a rally. By the way, I forgot the single most best-selling asset of selling put spreads. Okay, so which is easier? Finding where the stock is going, or guessing where it's not, all the other places where it's not going to go, and sell risk at some place you like. So for example, if I sell a put or a put spread in a stock, all I need is for it not to collapse, and I win. So if it rallies, I win. If it doesn't rally, I win. If it falls a little bit, I win. If it falls a lot of it, maybe I lose. That's the only scenario. If I need it, if I buy shares, I need a rally to win. Otherwise, I won't make anything. If it falls, I lose. If it doesn't rally, I lose. So if I buy calls, if it doesn't rally, I lose. If it stalls, I lose. If it falls, I lose. Selling puts or put spreads is the only way where one scenario blows right out, and that scenario has to be an extraordinary event, a low odds event. So I pick my odds of success by picking a low delta. My system is very simple, and I'll teach you that in the room. Super simple, super logic. You go to a casino, you can win with the casino. So people who lose in options, they fight the casino. I know what the market makers are doing. I play along their rules. I know I'm not better than them. Therefore, they allow me to win. It's like that little fish under the shark. You know, for some reason, the shark doesn't get to it because it still swims under it. Maybe it eats scales off it or something. I don't know. So symbiotic relationship of sorts. SoFi, I would get long at these levels. Not all in because of the overhang from the whole market. This is a good base. Look, it provided a bounce. Today, I would have sold puts in SoFi below support and decided to own the shares. This was a changing level, game-changing level. This was a test of that level, this test. So you don't want them to come back here and lose it. That's a head and shoulders that has tremendous downside, but that doesn't make sense. The company is healthy, it's growing, it's in the right spot. I like it. A firm, similar situation. We went long down here, and then it did this. So somebody says it dipped a lot. I was like, okay, it dipped a lot, but I went long here. I'm not going to go long until it comes closer to here. Two giant gaps. I'm okay passing up on it. Upstart went long here inside this red box. My thesis was, this is a crazy stock. It's been stuck sideways for weeks. It's going to move. So we took a long. This happened. Somebody said, you want a long now? Nope. In fact, I showed it up here somewhere and it went fine. Whew. All right. Wish, it's a gambling stock. It's a wild one. It could make you a lot of money. So it's cheap enough to hold calls, but they're, trash until they hit. Twitter, I prefer Snap. They look the same. Long-term setup, fine. I don't trust in the company management, especially now that the head chief is gone. So GME, I don't know. It's a great trader. I wouldn't trust them for an investment, but if you know how to read charts, can make a lot of money with GME. For example, right now, what is it, falling 10%? They had reports on earnings, right? I didn't read the report. So what you got to do is make sure if you went long today on a dip, you have to stop if this is lost, because then maybe they stop here or maybe they don't. And it's a wild ticker. So if you go to GME today, you will see the implied volatility pretty high. It's not coming up. See, bugs, told you. I know it's there. See, it's not showing up. So if I choose one and I go back and type GME, nope. It's right there. That's pretty weird. So let's see here, GME, that's today's contract. Back to 120 implied volatility. I bet you it was like 1,000 yesterday. So yeah, all these people lost all their money today. All right. Hood and space, you're going to go on face. I like space because it's a long-term prospect. My favorite income strategy, bull put spread. Yes. Cash secured puts better. Depends on the environment, depends on the stock. I do not sell puts naked, cash secured puts, that's what it's called, unless I want to own shares. With SoFi, I would. With Palantir, I would. With Wish and such like that, no, I would not. With Disney, not at these levels. I would do a put spread in Disney. What is my delta on my trades? If I'm selling, it's going to have to be 15 or lower, unless it's Palantir and I want to own it higher, I would get aggressive. Last time I sold on Palantir, I sold at the money. DocQ is a good place to catch it after the dip, of course. But if you pull up a weekly on DocQ, you can see how far lower it can go through no fault of its own. So it's okay here. But what if the market's correct? It won't stop. Square, I like it long term. I would buy the dip in Square, PayPal, Visa, MasterCard. What's the other one? SoFi, I said that. Affirm, all of those I would buy dips, not all of them together. I chose PayPal. Cost, nothing happened today. It's too high for me right now. Whew. Okay, I'm done if you're done. Mara, we've traded Mara before. Coin, oh, we bought the dip in Coin. So here's the craziest thing, right? So they trade Coin with the price of Bitcoin. What kind of logic is that? What kind of logic is that? So Coin profits from trading crypto, not the price of crypto. So the more active crypto prices are, the more money they're going to make. So we bought the dip in Coin and we made money on it. That was an easy win. Now the crypto story, I didn't get to it. I'm going to throw a bone. Staking, make sure not to stake inside your wallet, stake inside your trading company. I staked inside crypto.com for free. It's 10% yield, beautiful. And then I said, oh, I'll do the same inside my DeFi wallet. No, so I send the money there and I go to stake it. You don't have enough Ethereum to pay for the staking. It's like, what? Okay, so how much do I need? They don't tell you. You have to estimate. How much is that? Like $250. What? So, okay, let me send my money back. Nope, you can't. You don't have enough Ethereum to send your money back. What? What do I do? It's like, so I have to go buy Ethereum, estimate how much I need, send it to my wallet, because they won't let me sell my shares of TUSD to buy Ethereum with it. Long story short, I need $400 to bring my money back and leave Ethereum stranded, because if I don't guess the exact amount, I have to guess a little bit over. So that little bit over is going to be just sitting in the DeFi wallet. It's a complete scam. They don't tell you ahead of time. So stake inside your trading platform, park your coins in your wallet that you don't want to stake. All right. Okay, I'm done. Rodrigo.
Hey, Nick. Well, number one, thank you, man, for being here. Always
I love
helping
these
out.
things. Are you kidding me? I love it.
Yeah, it's very interesting to see, and a lot of these people already know you, so they already are familiar with the stuff that you do here. But definitely appreciate you here, Nick, helping out always with the options. And I'm sure you have a lot of tickers to get to for all the chat members and things that you're looking at.
I do have homework. One person is asking, our buddy is asking, can they fix a problem trade with options? A lot of times you can. I just have to know more about it. So if you're in the chat room, hit me up. If you know how to reach me, you can hit me up. But my day is fully busy with the chat room people. So I think Rodrigo is hanging around here. He's going to answer some of your questions on how to reach us and such. Listen, if you're serious about trading and somebody is promising you a lot of effort, I'm not promising you magic buttons, but I'm promising you 120% effort to get you to what you need. And they're promising you your money back if you don't like it. So I know I had at least one person that said, oh, I'm a little confused, I'm lost. So I'm pretty sure he's upset right now. So I have to go find him and see if he's okay with it. So it's free to try. You just have to commit to it. And if you're in it for the long run, then you're not serious about investing if you cannot commit to somebody that is promising you a lot. Hopefully I can deliver for you. I'll do my best. And you let me know I'm falling short. I'll up it up. All right, I'm out.
All right, Nick. Thanks for being here.
All right, bye.
Guys, so I'm gonna post the link here, but go ahead, throw your questions, go crazy with it. I'm gonna be here for a couple minutes, just going over this with you guys. Okay. I'm showing you the chat room right now. There's a couple tools there that you're gonna see on the right side. These tools right here that we would just added that. There's a development team there that's adding more and more tools. And this is the old chat. We're in the final development stages of releasing the new chat. Rizwan, okay, let's go over the questions. Asking if the money back guarantee has any conditions. No. 7-day money back guarantee. If you don't like it, you get your money back. It's that simple. And any feedback, of course, is appreciated always. Free gift tonight. You have to email me after you join, Berlin. Have to send me an email after you join if you want to get the gift, and before midnight. So the laptops are included. If you see a laptop in the checkout, that means that there is a laptop left. If you don't see one, that means that we're out of laptops and you're out of luck. So the deal is until midnight. I don't know, the laptops might, go away earlier than that. So, but it's the Black Friday special for today, Rizwan. Berlin, yeah, that would be the gift, correct. Miguel, I'm posting the link. You're asking how you can get into the chat room. I posted the link there. Any questions you have about the chat room, this is the time to ask. It's 7-day money back guarantee, RRSV. France, how do you contact Nick? In the chat room. I put the link there in the Zoom chat. Let's see if anybody on YouTube has questions. All right, if you guys on YouTube have questions, I'm looking. All right, I haven't forgotten about you guys. You're welcome, Mike. Vitali, so the recordings are available to all of the chat members. Rizwan, yes, we do. It's with well, I mean, right now with Nick, since basically every trade idea that he puts out does come with education. So it's practical education, it's theoretical education mixed into one, gives you the best of both, so that people that are learning actually can learn with real actionable trade ideas, and vice versa. So people that are just studying, not trading. So you have people that trade equities, options, crypto, Forex a lot. You're welcome, Satish. Any questions, guys, go ahead and drop them now. Right now is the time. It's a 7-day money back guarantee period. Once you join, you keep that discount. So that means next year you will renew at the same 78% discount price instead of paying the full amount, which is like 6,100 or something like that. You also will get the complimentary new Google Chromebook laptop if you do see one on the checkout. And that does include the sessions as well on Sundays. So every Sunday, you're going to have a session with Nick. It's just for chat members. And keep in mind, everybody in this chat community is a verified real person. It's a real trader. It's not like these pump and dump chat rooms that you see, these Discord chats. Everybody is a verified active Benzinga member and user. So know the community that you're in. That's what it's about, really. You have a lot of people that are starting to trade and they've joined the wrong community, which happens to a lot of traders. And they end up blowing up their account because they were really just expecting a chat service, right? They just because it's a chat service, like if it would work like anything else does, right? So with trading, you do need a little bit more guidance, especially with options. You need more help. You need a mentor, and a mentor, I mean a real mentor, not like some YouTube kid. I'm talking about somebody with decades of experience that knows what they're doing, understands risk, and cares about you deep down. Nic cares a lot about all of his members. I know I've learned a lot from him myself, and the progress that people make is amazing. So you guys should try it out, at least for the 7-day money back period. Raj, yeah, this would be like a fast track because it's live trading. So this is a live trading room with Nic. It starts early in the morning and it ends late at night. There's constant videos. What I'm showing you here in the chat room, you can see that Nic is posting trade ideas all the time. Let me scroll up a bit. This is one. So you get like a midday update here. So you get an update in the morning. So if you guys have to go work during the day, you can always just check in really quick, and check also at noon for the midday recap. Okay, and it always comes with a video with a full explanation, so you always know what's going on in the markets, and you don't have to be staring at charts all day. You can have a life. You can go do other stuff, and Nic will be all day grinding, going through charts, making sure he gives you the best setups and best trade ideas. So that is really, amazing, all the time and effort that Nic does put into it. As a trader, I can tell you none of this existed when I started. So, it would have been good to have something like this, a trusted community, a trusted mentor, instead of trying to figure it out on my own and, jumping into these pump and dump chat rooms. So let's see. So this is the live call on Zoom, what I'm showing you guys there. Helmut is asking, how do you get your address? Yeah, so after the 7-day period, Helmut, we would, after the 7-day money back refund period, we would pretty much collect the address. We'd send you a quick email for that, and we'd send it over to you. And then you don't have to return it. You don't have to worry about any of that. This is a complimentary gift. It is a happy birthday, not a happy birthday. It's a Christmas gift from Benzinga to you guys. Okay, this is the Christmas special plus the Black Friday deal. So it's getting pretty hot here. Okay. So that's how we get the address, Helmut. Chuck White. Unfortunately, Chuck, the price wouldn't change if we take off the laptop, since it's only a courtesy gift. So it wouldn't change anything, unfortunately. KGV Voler asking, what tools do I need in order to start learning? Well, the number one thing would be to know what you're doing, right? So the best way to learn that, I'd say, is to join a community with a mentor that is literally, helping you, holding your hand side by side. Like, what are you doing? Like, if you come in with some crazy trade and like he just checks it, like, hey, look, this is very risky. I don't know. Do you understand the risk? It helps a lot to filter your trades, because you don't know what you're doing wrong until somebody else tells you, right? You don't know what you don't know. So start there, and then Nic is going to kind of mold you into that trader that you want to be, depending, right, on your style, of your trading style. And then from there, you continue working on your strategies, and you always have the feedback from Nic, direct message access. So if you guys have a specific question about your portfolio and maybe you're too shy, and honestly, it doesn't matter. A lot of people like talk about their, trading situation in the general chat room, but you can always direct message Nic, and you can always talk to him directly. That way, if you are a little bit shy and you don't want to talk everybody to see it, then you can talk to him directly. So somebody's asking here about Roku. He sends you a full chart with notes of Roku with all the important levels. And this is just a basic quick one, guys. It's a basic quick one. KGV. But if you do want something else, you can call me. We can try to work something out. But this is for the chat room, basically. And for those that do sign up today, remember to email me to claim your prize. If you don't email me, you don't get it. Unfortunately, I have to do it. So make sure you send that. All right, KGV. No, Rizwan, you don't. That's totally separate. Helmut, send me an email with that specific request, and I'll try to get it done tomorrow. Lana, let me put the email for you. Hold up. And yes, this deal expires at midnight, correct? That's correct, midnight. So this is the Black Friday special. We just extended it today. Because of the special session here that Nick had planned for everybody. So once you go through the checkout, you will be able to go. Helmut, send me an email. Like just send me a quick email with the request. Once you click on the checkout, it's going to take you to the chat room. So you'll have direct access there to Nick, and you'll be able to start trading with the community. Make sure to join tomorrow in the morning. If you join today at around 8:30 a.m. Eastern, Nick is going to post the setup for the day. He's going to post basically what he's looking at. He gives you a full detailed view of the markets at that point in time. He's at that point, he has already scanned the futures and other stocks. So it's like having your eyes on the market without actually having them. So it's a great tool. It saves you time. So it just helps you in general as well to stay a little bit more on top of what's going on in the markets. If you have that trading partner, that trading mentor, educator, feeding you trade ideas like this other, like the video he made with like 120 stocks. Okay, if you want to claim the prize once you signed up, you have to send me a direct email, not post the email on the chat. So I'm going to put the email there 1 second. And there's only like 6 more laptops left, I think. That's what they're telling me. So Ravi, Helmut, I'm putting my email there. So if once you join and everything, just let me know there and I'll do it for you. Okay, guys. So answered a couple of questions here. I have some emails from you guys. Let's go ahead and always keep in mind that this is a Black Friday extension. So I'm doing my best to give you guys the deal, but it's going to expire at midnight. So with that in mind, guys, thank you so much for joining here. I'm going to get off the stream here in a little bit. I'm just going to let it on for some time. And if you have questions, I dropped my contact there in the chat. I dropped the email, the number, the link to join, guys. Thanks again for being here, for joining us today with Nic Chahine. It was a great session. It's always very informative, helpful for traders. So anything else that you guys need, just reach out in the contact. I'll make sure to get back to you, Ravi. The email, I posted it in the chat room, Ravi. Okay, in the Zoom chat. All right, guys. Thanks a lot for being here, and we'll catch you guys on the next time.